Okay. Hello, everyone, and welcome to the latest instalments of our Ask an Expert sessions, where we bring home buying experts along to help answer your questions. Today's session is all about home buying, all about the home buying schemes that are available and the alternatives to the traditional mortgages that you may not have heard of before. As always, these sessions are for information only and not to be taken as financial advice. Everyone's circumstances are different, and particularly when it comes to mortgages, so just make sure that whatever you're taking away from the session today, you take that forward to a professional advisor or someone who's qualified to give you mortgage advice before you make your final decisions. Before we get started, just very quickly, a reminder of who I am. I'm Kieran. I run the first-time buyer community as well as a company called Catini, and we're on a mission to make the home buying journey less stressful. These sessions are all part of doing just that, and this is just one of the ways that we're trying to make that home buying experience less stressful. Like last month, I'm joined by a couple of experts, and you can already see them already on our screens. First, we have Kirsty, who's head of mortgages at Tembo, an award-winning mortgage broker helping first-time buyers and others to bridge the growing affordability gap through specialist buying schemes, because it just keeps on getting harder and harder to buy a home nowadays. Kirsty, welcome to your first session with us. Tell us a little bit about Tembo and what you do.
Thank you very much, Kieran. So at Tembo, essentially my role is head of mortgages. So I support all of the brokers in ensuring that they're up to date with their criteria knowledge, making sure they know what type of different schemes are out there that they can work with to help support buyers. And like you say, just obviously the main sort of passion for us as a brokerage and being different, although there's lots of fintech brokers out there, our innovative technology is all about, essentially making their, a one sort of stop shop essentially for people to come and get that advice. So including people like Wayhome and the scheme that they offer. So it's making sure that, we are the place to go where they can essentially look at as many options as possible, which, like you say, hopefully makes it less stressful for kind of looking to even just get advice, let alone actually then entering the home buying journey. So that's mainly what we do.
Wonderful. Thanks, Kirsty. And we all need a little bit less stress in the home buying process. But Chris, this takes us nicely on to you. So Wayhome's created a new way to buy a home without a mortgage called Gradual Homeownership, and you work with Tembo. You're on their platform. But can you introduce yourself a little bit and tell us a little bit about Wayhome, but let's not go into too much detail because we'll come back to that a little bit later.
Yeah, perfect. Cheers, Kieran. As I said, my name's Chris. I'm a partnerships manager here at Wayhome. So my job is to bring on partners such as brokers like Tembo, other networks, clubs and platforms like Catini, and get them to help spread the word of our product here at Wayhome. I also work a bit in the sales team, talking to customers, helping them move through their buying journey from day one, hopefully right through to getting an offer accepted.
Wonderful. So welcome to your first live session with us, our esteemed expert. So I suppose let's just get straight into it. So Kirsty, I'll probably come to you and let's do a little bit of scene setting before we kind of get into the schemes and the different types of products. Buying a home is a hard thing to achieve. It takes a long time, but can you tell us a little bit about why it's getting harder and why it's so hard?
Well, lots of things inclusive, and I know we talk about them a lot, but obviously the cost of living increase. So obviously people having less disposable income, allowing them to save a deposit for buying a house. Obviously wages are not increasing as quickly as inflation is rising and the cost of things. So again, making it even more difficult. There's obviously the rate rises as well in the market. So again, that makes it that bit more expensive monthly for people to have a mortgage. So again, takes that, it's just that added pressure of, is that a commitment that, I can commit to and actually, can I buy a property? So there's lots of different reasons. And the biggest one is, all of those factor into affordability. And there's so many different ways that lenders work affordability out. And again, that can be really difficult, just going to your bank or your, local building society on the high street, just trying to actually work out where you fit into a lender's criteria. And again, it can put people off because they go and they find one option and they get a no, and then they feel like that's potentially the only option, and then they don't know where to look from there. So combined with all of the things that we face day to day in terms of, like I say, those sort of salaries and rate rises and cost of living, it's then not knowing necessarily where to go to get that information, which can make it really difficult.
Yeah, indeed. I think it was only yesterday we had someone in the group who she's 29, bless her, so she's ahead of the game. I think the average age for buying a home in outside of London is 33 at the minute, but that low deposit, not a massive income, and just feeling like it's just an unsurmountable mountain to get through. So it is a bit of a challenge. So so kind of it's difficult and it's getting harder, but there's a lot of schemes out there. So let's kind of flip to the other side, the glass half full side of things. So Chris, again, without getting into Wayhome just yet, can you explain some of the schemes that are out there that are available to home buyers, so kind of the government schemes and things?
Yeah, I think we're looking at the government schemes. There's kind of 6 key ones to talk about. I'll start with kind of the probably more wider known one at the moment, which is the First Home scheme. That's had a bit more press recently, but this focus is more on new builds. They've got to be built within the last kind of 5 years or so, and discounts on these kind of range from 30 to 50% of market value. They do have some caps. I think it's 250,000 out of London and 450 in London. But you do, when you come to sell, have to sell to someone using the same scheme at the same percentage. For people living in local authority housing, then there is the Right to Buy scheme. Discounts on this range from about 35 to 70%, depending how long you've been in the home and the type of property it is. But as I said, this is limited to people already living in a local authority house and have to have lived there for at least 3 years. And have a public sector landlord. So it doesn't include everyone. We've then got a probably less known scheme, which is the mortgage guarantee scheme. This one incentivizes the banks a bit more to lend on a 95% loan to value mortgage. So not one that first time buyers would actively go out and look for maybe, but something that helps the banks increase the amount of products at that level that they have. Help to Build, probably not something that we need to go into too much, but it's an equity loan type product similar to the Help to Buy scheme that was around. And that encourages people to buy plots of land, build homes, and using an equity loan to help fund that. If we then look at shared ownership, this is kind of the product that is closely linked with Wayhome and kind of the closest comparable product out there. But as I said, we'll come on to that later. With this scheme, you tend to buy between 10 to 75% of the home, and you're paying rent on the remaining portion that you don't own. This is again limited to newer build properties, and as and when you come to sell, unless you've managed to buy that 100% of it, you have to sell to someone using the scheme again. Staircasing in this scheme, you can buy some schemes allow you to buy as little as 5% per year, but some will want you to buy in minimum chunks of 10%. So that can be quite difficult for people trying to do.
And
the last one,
because just with that, so just staircasing, that's where, say you've bought on a certain percentage of your home, you're then increasing your ownership and decreasing the other person's ownership. Or it's not usually a person, it's another entity, whether it be a company or the government, for example. Yeah,
exactly that. Yeah. And then the last one to talk about, it's ended now. There is a bit of chatter that it might come back one day, but that's the Help to Buy scheme, and this one was very popular. Ended in October last year. Again, new build, and it had to go through certain developers, but they would give you an equity loan. This ranged from 5 to 20% loan, and you would get a mortgage for the remaining portion. You could put down as little as a 5% deposit on this, and depending on the location, you could buy up to different amounts. So in London, you could go right up to 600,000. In the southeast of England, it was around the 440 mark. So it did depend on location quite massively. It was an interest-free loan for the first 5 years, but from year 6 onwards, there was interest payable on that.
Okay, fantastic. So there's lots of schemes out there, but there's still kind of gaps, isn't there? Really, if you think about a lot of those schemes, most of them are focused on new builds. Some of them are focused on just making sure that there's 5% deposit products in the market. For some properties, even getting a 5% deposit is a mission in itself. So there are still some gaps. So I suppose now is a best time than any to maybe introduce what Wayhome does, and how you fill one of those gaps, and then maybe Kirsty will come to you to talk about what else you see in the market and what other mortgage products are available.
Yeah, perfect. So what does Wayhome do? Well, as I said, the closest comparable product out there is the shared ownership scheme. So as Kieran, you mentioned earlier, we started a product called Gradual Homeownership. So if we break it down, the simplest way of explaining it is it's a part by part rent scheme. So the customer starts buying whatever they can, but they still need that minimum 5% deposit, and we will buy the rest for you. This means there's no mortgage. We're not lending you any money. So it's a completely interest-free product. With part own, part rent, it means you are still a homeowner. So we want you to make it a home, paint the walls, change the carpets, get a pet, all that kind of stuff that makes it home, even replacing the kitchen or the bathroom that's a bit out of date. And there's no term to our product. So you're free to live there as long as you like. You then rent the rest of the home at market rate rent. So we'd go, and let's say you were buying in St Albans and you were buying a 2-bed flat, we'd go and look at what does a 2-bed flat rent for in that area. And let's say, for argument's sake, it was £1,000 a month. That would be your market rate rent. If you were in a position where you bought 10% of that property on day one, you'd only pay 90% of that rent. So you're only paying £900 a month. As you go, hopefully you're able to save your pennies and buy more. And we make that staircasing really flexible, really simple, and allow customers to do it in bite-sized chunks or do it in one lump sum every year. It's completely up to you. Each transaction is a minimum of £50, but you can buy right up to 5% per year. And each time you buy more, your rent will decrease. So if you were able to buy that extra 5% this year, your ownership would jump up to 15% and your rent would come down to 850 in that case. The other big difference between us and shared ownership, you're buying off the open market. You're buying a home of your choice instead of a home in a certain development. So instead of buying that new build flat or that new build house, if you want to go and buy a Victorian flat, then that's absolutely fine. The choice of the style, the location, all of that is completely up to you.
Yeah, I think that's really, really important and really powerful, because so reflecting on my own situation, when I went through the home buying process, me and my partner, we didn't want to buy a new build. We wanted to buy somewhere where we could put our stamp on. And so if for a lot of people that want to do that, shared ownership in its current form is quite restrictive. It's just not available. And maybe you have to compromise on your preferences. And sometimes you need to do that. But yeah, that's quite unique. Yeah,
exactly.
Cool. Okay. Something else you mentioned that I think's quite important is that there's no interest. Not no interest. It's not a mortgage, is it really? So that makes it Sharia compliant, which is another unique thing about Wayhome versus, say, your traditional mortgage. Again, a certain part of the population, the demographic, can't just go to their normal bank to get a mortgage because it just doesn't work for them. So that's quite a unique thing, I think, for Wayhome.
Yeah, absolutely.
Yeah. Would you say are there any drawbacks to the scheme?
Yes. With any scheme, it's not going to be 100% right for anybody. So at the moment, we're only operating in England. We cover kind of the Midlands, the South, the Southeast. We do cover all of London. Unfortunately, by the time you get kind of above Manchester, York, that kind of area, then we're less likely to be in that area. There's a few reasons, but it mostly comes down to the need of us being there is probably be a little bit less likely. The minimum house price we work with is 150,000, and by the time you get up to that level, you're getting fewer homes that are needing a scheme like ours. I also spoke about staircasing. You're able to buy 5% per year. That is up to a total ownership of 40%. Once you get to that 40%, you're absolutely free to stay with us and keep renting, but you wouldn't be able to buy more incrementally. You would have to buy the remaining 60% out with another product, whether that be a conventional or a Sharia mortgage, whether that's another finance product or cash if you had it. But you wouldn't be able to continue staircasing after that. And then the third thing is you would have to pay stamp duty on the property. Unfortunately, most of our customers are first-time buyers, and they come to us and say, "Oh, but I'm a first-time buyer. We get our relief." Unfortunately, with Wayhome, because of the way we buy as a partnership, you do lose that stamp duty relief. But on the other hand, we actually split all the buying costs with you. So that's everything from stamp duty, survey, solicitors, searches, everything that's involved in that buying process. We'll split those with you. So if you only buy 10% of the property, you only pay 10% of those costs.
Oh, fantastic. And I didn't actually realise that with the cost side of things. So Kirsty, I'll probably jump to you for a second here, because that stamp duty not being available, for example, that may be a decision point for a customer. It may not make sense for them to use Wayhome because the benefits of having stamp duty outweighs the benefits of not having it. So how did you get around that from a broking perspective? So it's quite a technical, specific question, but
yeah. So the main sort of option we would look at in that space is to keep a buyer, essentially to keep their stamp duty. First time buyer stamp duty allowance would be looking at a joint borrower sole proprietor mortgage. So what that means is that essentially you would have a buyer and essentially everyone calls it slightly different. So I'll give you all of the kind of sort of jargon as there is in mortgage world. So some people call it a booster. Some people call it a guarantor. Some people call it a supporter. So essentially, if there was let's take a child. I say child, a 21-year-old daughter, for example, and her mum. I think we all do, right?
Yeah.
And then perhaps her mum supporting her to buy a property. Essentially, the daughter would buy the property and would be named on the deed and would be named on a mortgage with her mum. But her mum essentially wouldn't own the property, so she wouldn't be on the title deeds, which means then there is no stamp duty payable. So that's the main way that we would look at kind of maintaining that as an option, basically, is the joint borrower sole proprietor mortgage.
Brilliant. Good to know that there's options out there, and that's what this session's all about. So, Chris, last thing I'll ask you before we kind of move on to you, Kirsty, to kind of expand our view a little bit of all the other options out there. But how many people have Wayhome helped so far? Because you've been around for a little while, and you've actually recently raised a lot of money to fund the business as well. I think it's something like 8 million, but you'll probably correct me on that. But how many people have you helped?
Yes, so we've been going for about 5 years, but we only started buying homes around 18 months ago. With any kind of startup in the finance world, the first couple of years is all about regulatory stuff, and Kirsty, you'll know exactly what I'm talking about, working with the FCA and stuff like that. But we started buying houses about 18 months ago, and we've grown a lot in that time. So we've now helped over 150 people actually move into homes in that 18 months. And we're helping around 15 to 20 a month actually complete on homes as well. As you said, Kieran, yes, we have just raised 8 million, which is going to go a long way towards our operational costs and helping us buy and helping, keep the lights on, keep us buying homes. But in terms of, what we've got in the funnel at the moment, we've got well over 200 properties going through the journey at the moment, as well as hundreds of customers with agreement in principles with us, just waiting to find the right home for them.
Yeah, and that's huge, because the home buying process it's not the quickest of things. So I think the average around is between 16 and 20 weeks. Obviously depends who your team members are. If you've got an amazing conveyancer and amazing estate agent, it can obviously be a lot quicker. But yeah, to have 200 plus in the pipeline, that's massive news. Cool. So that's a bit about gradual home ownership then. So Kirsty, obviously at Tembo, you look across the whole market, and you've kind of built this specialism around these specialist home buying schemes and helping people navigate that. What other schemes or other products are out there that people can use to get on the ladder?
There's so many, and I think, I'd probably be here for hours if I listed, all of them. But I think this is the exciting part, right? And that is kind of why, again, like, we're partnering with companies like Wayhome and working alongside Chris, is because it's there, Chris, and I'm sure you won't mind me saying, Wayhome isn't going to be for everybody. It's not going to fit every single person. And therefore, there needs to be different alternatives. And that is why, we created what we've created with not only the technology, but also having the experts in the right areas. So it's about actually finding as many different options so that actually we find a solution that fits. So, for example, you are going to have lenders out there that will work on, say, a professional basis. So if you work within the NHS, or you are a doctor or a dentist or a nurse, or you're a solicitor or an accountant, for an example, you might have a mortgage company that will offer you an enhanced level of income multiple. So that might be called a professional range. And there aren't huge amounts of those. And they all do have little caveats as to, if you're an accountant, you might have to have a AA, something certificate. I'm not an accountant myself, so don't know all of the bits and bobs, but there are certain little caveats in that criteria. So again, not an option for everyone. You might have enhanced borrowing purely, without needing to be a professional, but you might need to have a certain level of income. So Nationwide, as an example, offer helping hands. So they'll go up to 5.5 times your income, depending on, as long as you've got a minimum level of income, which is 35,000 currently. But again, you can't be self-employed. So, you might win with one hand, but it might be taken with another, for example. And what we specialise in, and kind of how Tembo actually started, was all about the family borrowing. So it's actually using a loved one or a friend, if you're lucky enough to have friends that generous, that will help you, buy a property. So that might be with an income boost, which is what we call it here at Tembo, which is the joint borrower sole proprietor mortgage that I mentioned before, where we can use your family member or friend's income to boost what you can borrow, but they're not named on the deeds of your property, so it doesn't affect sort of the ownership. It might be using a family member's home. So they might be kind enough to say, you can raise 20% against our, security against our home, which effectively acts as your deposit. So you essentially can get 100% mortgage from a lender, but on the basis that your mum or dad has very kindly raised or, put a 20% security against their property. And your family member might release money from their home, and that might be a standard mortgage. It might be equity release. It might be a RIO. So retirement interest only options for those older borrowers, so such as older parents and grandparents. So lots of ways for family to help, or friends, if that's appropriate for you. And again, it isn't for everybody. We're not all lucky to have, everyone that can sort of support us, whether it be with income or cash savings. And then, of course, just like Wayhome, we work with, other providers in that space of sort of the part buy, part rent. Again, all different options for different scenarios and different customers. And shared ownership. So we've kind of touched on shared ownership as well. So we are looking, and that's a really big part of my role, is to go out there and speak to different lenders and actually find what is it that they can bring to help us help our customers. And I was talking to someone earlier, and their sort of big USP is we go up to 9 times income. I mean, that's massive, right? Huge, and there's a lot of caveats in that. Again, not going to be as simple as, here's your 9 times income. But if you fit their 5 points of criteria, well, great. They'll use latest year's income on your self-employed, and they'll give you up to 9 times income. And guess what? If you've had a little blip in your credit history, that also doesn't affect you, but you might pay a slight premium for that in the interest rate. And you kind of signaled towards that sort of earlier, Kieran, where you said, it might not be great if you have to then pay stamp duty and you have to compromise. And that, I'm sure you'll say the same. When I first bought a home, I had very little deposit. It was a bad time in the market, and I had an over 5% interest rate, which at the time, was terrifying. But actually now that's become the new norm. But we're quite scared of that because actually we're used to rates sub 2%. So there's lots of options out there. And I think that's where the broker side of things comes into it, because that's what we're here to direct. for example, with Wayhome, if you fit that criteria and that suits you, we're gonna be referring you to them, because that is the best option for you as a customer. But if that's not, then we're here to actually say, okay, well, look, we could go down this road. And that is where brokers come into their own, of being able to actually guide you, direct you, offer you advice. And it, whether it's us or whether it's another broker, it's, you don't have to pay for that advice. It's about getting that advice to start your journey and working out what is going to be right for you. And it might not be that you could do something for 6 to 12 months, but at least if you start that process, you're on the right track to kind of beginning the home ownership journey.
Exactly. And you've got a plan. And it kind of takes us back to something you kind of said at the start around just going to your lender, your bank, for example, it's not the best approach, because they don't have that whole of market view. Then they may not have the right products for you. So using that broker, that expert support is definitely key, and can save you thousands and thousands of pounds by finding you the best product. What about, so we have a few people in the community where they don't necessarily have the family support or the friends that are going to give them the money. What else is out there for those individuals that don't have that external support? You talked about income boost. I think we've got the Skipton 100% mortgage that come out, but again, there's lots of caveats with that, and probably is with many of these products. Is there anything else out there for those kind of people off the top of your head? I'm putting you on the spot, so don't worry.
Do you know what? It's not talked about lots. The Skipton product, the 100% Skipton product. So that got a lot of press, rightly so, because it is, we're moving in a space where we are trying to innovate the mortgage market. It's quite a stale market. It's not been focused on first-time buyers for a long time. It's not, there's not been that many options out there to help people, and rightly so, publicised because of the options. But like you say, again, not going to be for everybody, unfortunately. There are a lot of lenders that don't shout about things. For example, there are other providers out there. I can think of someone off the top of my head straight away. Again, Mansfield Building Society as an example. They will do a family assist mortgage. So again, kind of bringing in that element there of I guess sort of family and friends. But again, shared ownership, you can buy a much smaller percentage of a property. And again, you might feel like, I've only been able to afford 25% of that property. But over time, as your circumstances change, that might have allowed you to put down a very small 5% deposit, versus that 25% sort of property price that you're purchasing for. Again, that's a lot different than having to put in 5% of, the full market value that you're looking at.
Exactly. It's like you're on the ladder as well with that shared ownership stuff. I think a lot of people they look at it and think, I'm not owning my full home. But it's a step in the right direction, right? Like you're not saving up for it to happen in 10 years' time, for example. You're on it now. You're gaining the equity of that property as it gains value. Hopefully, may not, but yeah.
And Chris said it earlier. We all laughed, but buy a pet, paint your walls. Like it's important, right? Like it's really tough to buy a house, and like you said, like let's not make this miserable because there are so many options. But it is tough, and actually all of those options still are giving you a home at the end of the day. And just because that might not be what your friend did, we get that a lot. People can, we do that in society, don't we? A lot, where we compare ourselves, and it's like, well, my friend managed to get this size mortgage, and and it's like, yeah, that's great, that's what your friend did, but actually here's a solution that might work for you. There isn't a huge amount. There isn't a huge amount out there that doesn't involve sort of friends or family, where other than you mentioned obviously the Skipton product, where essentially you can borrow up to 100%, but like I say, kind of quite strict criteria on that, not things like capping you at what you've been renting at in the last sort of 12 to 18 months. So if your rental payment was £800 a month, that's the maximum mortgage payment you could ever have. So again, that's going to determine what sort of property price you can purchase at. There isn't a huge amount out there at the moment that's not going to involve the friends and family element, other than the gradual home ownership side of things. But it's standard mortgages, no.
Yeah, well, I'm hopeful that'll change. I think that with the 100% mortgage coming to market with Skipton, that may be a signal that it's to change. But obviously the flip side to all of this is that affordability checks and deposits are there for a risk protection, essentially, from a bank's perspective. They don't want to be over lending on to individuals that they don't think that are going to pay that back, rightly or wrongly, whether we believe that we will be able to pay that back and we can prove it because we paid our rent for God knows how long. It's just that's the way banks think, I think, at the minute. But
I do think here and there, if the Skipton product goes well and actually they've worked out the risk element, really, really safely, and they've done it rightly, because actually, like you say, a lot of people do often say to me, but Kirsty, I've been paying rent for 2 years. Yeah. I can afford way more than that mortgage payment is going to be. And like you say, quite rightly, that understandably, the frustration. But I think if they get that right, you'll see a lot more people start to follow in that direction.
Yeah, exactly.
It's really interesting because that's actually how we assess affordability. So one of the biggest things for us was actually looking at, the rental market's huge and everyone's going, well, I can pay $1,500 in rent. And actually that's exactly what we do. So we look at their history of renting as well and go, you can afford to pay X amount in rent. And then we backwards engineer that to a property price. And doing that, it allows us to get up to 10 times income as well. So I think actually we need to have a look at the mortgage market in general and go, maybe we should be looking at rental history a lot more.
Yeah, but it takes these kind of innovators though, like Wayhome and Skipton in itself, as you said, Kirsty, to they kind of trailblaze, prove it's worked, and then everyone else jumps on the bandwagon. So it's a shame that not everyone does it and innovates themselves, but we'll get there. Brilliant. Well, that's kind of it. I think we've covered it all off. I'm just going to quickly check the live stream and see if there's any comments or questions, and we don't have any. So I suppose that wraps everything up. Chris, Kirsty, is there anything else you'd like to add before I kind of get into the outro?
I think honestly, just don't. For me, my personal advice and professional would just be: don't rush, don't feel pressured. Start off by looking at what all of the options are out there. Seek out a broker, whether it's us at Tembo, whether it is another broker. It's just go out there, find someone you're comfortable working with, and get them to look at all of your options. And have a look at all of the sort of schemes that are out there. Don't be afraid to go and ask questions. Be annoying. Ask lots of questions, and first-time buyers especially, people always apologize for asking questions. They're the most exciting ones because they're the ones that want to learn, and they're the ones that often we can help the most. And don't put pressure on yourself. Don't be afraid to look at a scheme that you think might not suit you, because you never know what you might uncover. And I think it's tough out there, but there are options, and don't let the media scare you, because the media is very good at making it sound like the financial world and the house buying world is on its knees, and it's really not. Wayhome have just said, they're helping 15 to 20 customers a month. We're helping, on average, between, sort of 80 to 100 customers a month. So collectively, as two much smaller organizations in a very big pond of mortgage people out there, we're helping a lot of people.
Yeah. And there's a quick stat for everyone. Last year alone, there was 1.1 million home moves in the UK. So there's a lot of people moving, and you don't really hear about that in the news. You always hear, as you say, Kirsty, it's the bad news, because that's what sells. But yeah, brilliant. So I guess that's everything. So first off, thanks Kirsty, thanks Chris for joining us. Lots of useful information that I'm sure the group will love to digest. So yeah, thank you very much for coming along. Just repeating what I said at the start, and just kind of dovetailing into a little bit of what Kirsty said. All of this is just generic information about what's available, the schemes, the mortgages. When it comes to mortgages, getting that professional advice is definitely key. So if you feel like you need it, please do seek out a mortgage broker or a mortgage advisor to get that. What I'll do after this session, same as last time, is just post the links to Tembo and Wayhome in the Facebook group. If you have any questions after this session, then just put them in the comments, post about it, and then we'll get either Kirsty or someone from Tembo or Chris or someone from Wayhome to basically input and just give their professional opinion on what they do. But yeah, thanks again, Kirsty. Thanks again, Chris. Really appreciate you coming along.
Cheers,
Thanks very much for having me.
No worries. Bye.
Bye-bye.
Bye.